Imagine for a moment that you've invested tens of thousands of dollars earned by the sweat of your brow. Now imagine that you find out that the company you invested in's CEO, who was already getting paid over $1 million a year in salary, was using the company accounts to pay for a lavish lifestyle, in addition to giving himself massive bonuses and loans that would never be paid back, equaling hundreds of millions of dollars. This is exactly what happened to investors in Tyco stock during 2002 when the company's CEO, Dennis Kozlowski, was accused of doing just this. To find out how Kozlowski was able to pull off such a large con job, stay tuned, and make sure to hit that bell and subscribe icon below. This is the robbing of the Tyco corporate piggy bank. Tyco Laboratories was founded in 1960 as an investment and holding company focused on material science and energy conservation. Initially, the company provided research and development in the private sector. After going public in 1964, Tyco shifted to the commercial sector and rapidly acquired several companies and increased its sales from $34 million in 1973 to $500 million by 1982. Venturing into the fire protection, electronics, and packaging business by 1986, expanding to include healthcare and specialty products and flow control. Compartmentalized divisions of the company would aid Kozlowski in avoiding detection during his deception. In 1972, Dennis Kozlowski began working for Tyco. He would be heavily influenced by his mentor, then CEO Gaziano, who until his sudden death in 1982 was known for his extravagant spending and lavish lifestyle. Kozlowski's skills to cut spending and increase profits would garner the attention of the new CEO, John Fort III, who would promote Kozlowski to the president of Tyco's largest division, Grinnell Fire Production Systems Company. Under Kozlowski's aggressive leadership, Grinnell acquired most of its competitors, including the $360 million acquisition of Wermade International. The rapid changes and large-scale acquisitions would cause friction with the CEO, but backed by the board of directors, Ford would resign as CEO only to be replaced as Kozlowski in 1992. Under his leadership, Tyco continued to expand rapidly and would be renamed Tyco International in 2003. The company would acquire over 3,000 companies within Kozlowski's first decade as CEO, including ADT Services and Kindle Company, a medical supply company, which would become Tyco Healthcare Group, the second largest medical devices supplier after Johnson & Johnson, and doubling Tyco's earnings. The board would raise Kozlowski's salary and shares, making him the second highest paid CEO at the time. Kozlowski's lifestyle mirrored that of his former mentor, filled with multiple homes, vacations, cars, and parties. His power and influence allowed him to move the headquarters from Exeter, New Hampshire to Boca Raton, Florida, where he owned real estate, and allowed him to place certain people in high positions, including Kozlowski's co-conspirator, Mark Schwartz, who before joining Tyco was an auditor for Deloitte and Touche. Kozlowski promoted him from Director of Mergers and Acquisitions to CFO. The most prevalent fraud committed by Kozlowski was the distribution of unauthorized bonuses, to himself of course. Between the years of 1992 and 2002, over $150 million would be distributed, with over $81 million going to Kozlowski and the rest going to his underlings. Lavish spending on companies' accounts under the guise of business expenses allowed for Kozlowski and Schwartz to live lives of extreme luxury without having to spend a dime of their own money. Over $19 million would be spent on a luxury apartment for Kozlowski, and $1 million more would be spent on furnishing it, including $6,000 for a shower curtain. Fine art also adorned the walls of this apartment, featuring works from Monet and Renoir. Luxury company jets and lots were purchased and used by Kozlowski to travel to exotic locations, oftentimes with guests for no legitimate business purposes. Tyco had a program for allowing executives to take out low-interest loans for business and personal needs. Kozlowski and and CFO Schwartz would exploit the program, taking out millions and never making a single payment. The loans quickly disappeared from the company's balance sheets due to forgiveness clauses adopted by the company, essentially turning them into tax-free bonuses. The duo created fake transactions to hide their illegitimate activity and to inflate the company's acquisitions, thus ensuring their bonuses would be even more lucrative. By the time the dust had settled, Kozlowski and Schwartz had looted the company for over $600 million. This massive betrayal of trust to both the shareholders and employees shows exactly how unchecked power and severe lack of oversight can allow a person's greed to run wild. By the time the early 2000s rolled around, lavish spending was beginning to catch up with Kozlowski and Schwartz. Some investors noticed inconsistencies in Tyco's disclosed financial statements, particularly around executive compensation and internal loans. An extravagant $2 million birthday party for Kozlowski's wife in Sardinia was disguised as a shareholder meeting, drew media attention, and cast light on his lifestyle. It would be Kozlowski's love of fine art, however, which would be his downfall. Remember the New York apartment mentioned earlier? To avoid paying a steep New York sales tax, Kozlowski had the artwork shipped to Tyco facilities in New Hampshire and other states with no sales tax, cheating the state out of millions in uncollected revenue. The New York District Attorney's Office would eventually take notice of the massive spending and launch an investigation, eventually uncovering shipping records and an internal whistleblower. In 2013, Kozlowski and Schwartz were brought to trial on multiple counts of grand larceny. However, the case would be ruled a mistrial after one of the jurors was seen making an OK sign to the defense team, and a short time later his name and address were leaked to the media, and as a result, he received death threats. The two were brought to trial again in 2005, with the question brought before jurors not being whether or not they had taken the massive amount of wealth from the company, but whether or not it had been authorized and legal in the eyes of the law. In spite of Kozlowski's claims that he had been receiving fair compensation for running the company, he had brought from having $3 billion a year in revenue in 1992 to $35.6 billion in 2002. The jury would find Kozlowski and Schwartz both guilty on multiple counts of grand larceny and conspiracy, resulting in a sentence no greater than 25 years and no less than 8 years and 4 months. In addition, they were ordered to pay $134 million in restitution, and Kozlowski was fined $70 million and Schwartz another $35 million. Tyco would later sue Kozlowski for another $500 million, arguing that under New York's faithless servant doctrine, all compensation and benefits he received during his period of disloyalty were forfeit. The judge in this case agreed with Tyco and would award the company the full settlement. Kozlowski would receive work release in 2012 and would be paroled in 2014. And in 2015, after paying $167 million in restitution and fines, evaporating most of his wealth, Kozlowski's parole period ended and he has since been a free man. If you've made it this far, thank you for taking the time to watch this presentation from Evil Economics. We hope that you enjoyed it, and if you have a company or scandal you'd like us to cover in a future episode, please let us know in the comments down below. And if you haven't already, don't forget to like, share, and subscribe. Thanks again. We will see you in the next one.